What a week did we just have? This is going to be a summary of everything that happened this week to Tesla stock. Elon Musk even said to not buy Tesla stock, and then he proceeded on giving multiple reasons to buy Tesla stock. We did have some bad news for Tesla stock as well. Elon Musk also got sued for $56 billion. This is a latest update on that. The lawsuit has been going on for a while. We also had some good news, which we will dive into, which is one of the full self-driving competitors going out of business. Then there has been one risk of Tesla stock, which I believe is the single biggest risk, which I will share with you today in a summarized way as well. We did have quite a drop in Tesla stock. Tesla stock is down almost 10%, 8.28% this week, and that is mostly because of the Fed. The Fed is going to do bad things to interest rates. We will get into that quickly as well. We do have a report of, remember then Tesla cut prices last week in China? Well, now we have other EVs being cancelled because Teslas are better. We'll get into that as well. And we will get into Ron Barron saying Tesla stock will 7x. Elon Musk reiterates he believes that the robots, humanoid robot, will work. And Gary Black also believes Tesla stock will 7x as well. He comes to his conclusions in a very different way compared to Ron Barron. Ron Barron really, he follows Tesla's guidance for the most part. And then, of course, today we have James doing an interview with Dave Lee, and James said Tesla is probably 10, maybe 100, maybe 1,000 times ahead when it comes to collecting data for full self-driving. I just put 100 times because it just sounded too clickbaity. But really, I'm just taking words that James has said. So let's dive into the news of this week.
Well, I actually rarely try to convince anyone to invest in Tesla. And many times I've recommended people don't invest in Tesla, and I've said our stock is too high, but then people just ignore me and keep buying the stock for some reason.
Then Elon Musk explains if you are going to buy Tesla stock, there are two main reasons. Number one is full self-driving. Imagine what would happen to a company that sells a product and now that product becomes 5 times more useful. That is full self-driving. And the second reason Elon Musk gave was the humanoid robot that Tesla is working on, Optimus robot. Because then there would be basically no limit to the economy if Tesla is successful at building this humanoid robot, because there would be infinite labor. I believe that prediction by Elon Musk will age just about as well as himself. There was some conversation going on about how Model Y will probably become the best-selling vehicle in the whole world right now. That's Toyota Corolla, about 1 million units per year. And that is because, this is from ARK Invest, there is this law, rights law, that says specifically, it states that for every cumulative doubling of units produced, costs will fall by a constant percentage. And for the auto industry, that has been 15% cost decline with every cumulative doubling of units produced. And Tesla can still lower prices of Model Y vehicle and still make a tremendous amount of profit, and the margins will keep increasing because the production will keep increasing. Then I made this video telling everyone, every single Tesla stock investor has to see this drive from Hallmark's YouTube catalog channel, because this was a great indication of their full self-driving is right now. And I believe Tesla stock will 10x because of full self-driving before the end of 2030. 2030. One of the reasons I am so strongly convinced full self-driving will be solved is because when you look at the model size and billions of parameters of AI models, you look at where we are right now and look where we were before. This is the model size in terms of billions. So we had 100 million parameters in 2018. Next year, it's 10 times more, then 10 times more again, then 10 times more the previous year. And that is projected to keep 10xing. And the Moore's law, which states that the number of transistors doubles every 2 years, not every year, but every 2 years. And that law, Moore's law, brought us the internet revolution, the computer revolution, the smartphone revolution. All of our technologies rely on Moore's law, basically. But for full self-driving, we are looking at AI, increasing the number of parameters in its models by 10 times each year. And this is one of the latest drives, videos from Holmar's YouTube catalog channel. This is 3 hours, no interventions, 0 takeovers. This is now becoming so routine to see a video like this that no one is even paying attention, but they should be, because it's going to be improving exponentially. And so now it looks like, we still have quite a bit to improve, but I think the improvement is going to accelerate and be exponential. So maybe Elon Musk is right. Maybe it's right around the corner. We will know very soon. We had this wonderful interview with Andre, who is ex-AI lead at Tesla, who built basically most of current capabilities of full self-driving and autopilot for Tesla. And on this interview, 3-hour interview, long interview, one of the main points that he made was it's all about the fleet. It's not about what sensor you use. For example, Lex asked him, do you believe that it's important to use LiDAR, or what do you think about LiDAR being used by these other companies? And he answered by saying, it's not about the kind of sensor you use. Sure, you can use LiDAR, but you need data. If you use LiDAR, it's just another sensor. You still need data. So who has the fleet? Who has the data? That is the real question. And no one is even close to Tesla. Very good interview. If you haven't seen it, you should watch it. Then we had some bad news for Tesla. Specifically, Elon Musk has taken about 50 employees, and none of them left Tesla, by the way. They are just working now on Twitter, helping Elon as well. But now that I think about it, maybe this is actually not that bad, because I think some of them might be learning a thing or two at Twitter as well. Maybe they can, cross-pollinate their ideas. But I think still it's a net negative, because also Elon Musk is taking his attention away from Tesla. And Elon said that his workload went from something like 70 to 80 hours per week to now basically about 120 hours per week, now that he also has to work on Twitter. But it doesn't appear, at least from what he said in the interview with Ron Barron, it does not appear that Elon Musk is working or spending any less time on Tesla or SpaceX. There is potential for some very bad news, because Elon now owns Twitter, because we know Giga Shanghai is the biggest factory that Tesla has, and we know how forgiving China is when it comes to you speaking badly about them. And Elon Musk now has direct control of Twitter, and I think it's pretty obvious because it's a private company, and Elon has direct control of what is being said on Twitter. Now, I don't think it's likely that that specific government would interfere with Twitter, because Twitter is not even available in this country that we are all worried about. But it is important to keep in mind that there could be some serious repercussions if things go really far. That's just something to think about. So Twitter really is not, I don't think it's a net positive for Tesla overall, unfortunately. And I am a Tesla bull, you know that. I believe Tesla stock will 10x before the end of 2030. I'm just being real here. However, we had some good news as well. Argo AI, which was a competitor to Tesla's full self-driving, is shutting down. It was backed by Ford and Volkswagen, and that was a loss worth billions of dollars. Another competitor to Tesla's full self-driving was George Hotz, who stepped down as CEO from Comma AI. So 2 less competitors in 1 week for full self-driving. Nice. And this is where we have bad news again. We have a latest update on the $56 billion lawsuit against Elon Musk. This is all about Elon's compensation, which was the biggest payout in human history ever. The lawsuit basically says that the payout was too big, that because it was so big, for example, right now, we can make arguments that Elon Musk has so much money that he's not prioritizing Tesla anymore. This is why he's focused on Twitter, and that Tesla would have met all of the goals that Tesla had set for itself anyway, even without compensating Elon Musk, because it was moving towards that trajectory, with which I strongly disagree, because it was moving towards that trajectory because we had Elon Musk as CEO. So to me, this whole lawsuit is just a whole bunch of, you know what? It doesn't make any sense to me. Sadly, more bad news. Even though this is NIO, a competitor, which is 300 miles away from Shanghai, where we have one of their facilities, they were shut down because of the big cold that the whole world caught in 2020. And there is now a risk that Tesla could be suffering from the lockdown again. Unfortunately, hopefully that does not happen, but that's something to keep in mind. Even if Tesla does not have to shut down directly, it could still affect all of the suppliers. So still, this is not good. Then I reviewed the biggest single risk for Tesla that I believe exists today. And I brought it up because Ray Dalio, who founded the world's single biggest hedge fund in history, so he's respected, it's important to pay attention to him, I believe. He believes now that the likelihood of a global conflict is much higher than ever before. And one of the arguments that he presents is there are 5 major kinds of fights between countries. There are trade, economic fights, technology fights, capital fights, geopolitical fights, and then boxing. Unfortunately, Ray believes that now we are at a point where nothing changes. It is going in a very bad direction. But he also gives us hope, saying that maybe this time it's different because now we know more. But we know when it comes to investing, and also I would apply the same thing to geopolitics, there's almost nothing more dangerous than saying this time is different. So I don't know about this one. This one is a little bit of a downer, I know, but it's a very good read. If you like this kind of thing, you can search for Ray Dalio on LinkedIn. You will find the whole article. It's quite long. 20 minutes was very not enough to summarize the whole thing, actually. But if you like a summary, just watch my video. That video is called "This is the single biggest risk of holding Tesla stock." And those 5 kinds of fights that I mentioned that countries have, we basically have all of them except for the physical fighting. Hopefully that does not happen. That is my sincere hope. Remember the price cuts that we had for Tesla vehicles in China? Well, now EV competitors are getting their orders canceled because Teslas are better. So this was not mentioned. It was not mentioned which competitors exactly, but we suspect, NIO, Xpeng, probably. And I mentioned many times before that Tesla can take over the whole market, a lot of it at least, but just by lowering prices and putting everyone else out of business, because Tesla has the largest margins. We do spend on R&D, but we do have the highest, basically, gross margins out of all the automakers when we exclude exotic car makers. And remember, this is before 4680 batteries, before gigacastings, and before probably 2969 other things that Elon Musk has planned in the future for Tesla vehicles. This does not include the Cybertruck kind of a new way of manufacturing as well. I made a video why I'm not looking for better stocks than Tesla stock. One reason is simply because I believe there is less than 1% chance that I will lose money if I hold Tesla stock until the end of 2030. And of course, I believe it will 10x before the end of 2030. So the risk to reward ratio is high, and also I understand Tesla stock very well. Then I find something that it is very clear to me that it's a good deal. I don't want to waste time looking for other things because I know Tesla stock is once in a decade, once in a century investment kind of opportunity when we adjust for risk. Of course, there will be better opportunities eventually, but Tesla stock, in my opinion, not financial advice, that is the best investment that I can find at the moment. Elon Musk reiterated in the interview with Ron Barron that humanoid robots will work, and if you would like to see any kind of predictions with timelines, I think Ray Kurzweil, the futurist, is a good person to look at because his track record of predicting inventions is pretty decent. Over 80% of his predictions came true in the last something like 3 decades or something like that. Don't quote me on that one, but it's definitely over 80%. I just don't remember if it's in the last 3 decades, but something like that. And based on Ray, maybe 2029, no later than 2045, if you go based on what Ray Kurzweil says. Ron Barron says that Tesla stock will 7x. That's what he expects in the next 10 years. And that's without full self-driving. It's only based on the core EV business, so no energy. This is how he comes to the conclusion. He says it would be $4.5 trillion market cap, which would be about 7x. This assumes 20 million cars sold per year at $50,000 each at 30% operating margin. That is $300 billion in operating income. And then Ron would give a 15x in terms of PE ratio, and that gives us that 7x that we are looking for. I think it's important to pay attention to Ron Barron as well. He's a billionaire fund manager. I like to pay attention to people like that, personally. I believe this could also be the beginning of the end of YouTube. There was a tweet, YouTube gives creators 55% of ad revenue, and Elon Musk replied, "We can beat that." That is among other tweets where Elon Musk said, we will want to monetize and pay creators as much as we possibly can. We want to monetize short form content. We want to monetize long form content. And if he can beat YouTube's payout, so for example, knowing Elon Musk, he goes all in. So if, let's say, if you can make 50% more if you upload on Twitter your same content, basically, that is not just 50% more profit. That's probably going to double your profits if you are a creator because your expenses remain the same. But your revenue, let's say, increases by 50% without doing anything. Your profits, they more increase by more than 50%. Even if it's not 50%, that Elon Musk can beat YouTube's compensation, maybe let's say 20%, 30%, or even 10%, it still makes sense. And when creators get paid, they make better content and people come because there is good content on the platform. So it's this effect that is inevitable. And people simply go where they can find the content that they want to watch. For example, I used to watch Joe Rogan on YouTube. He went to Spotify. That I stopped coming to YouTube for a while because I basically just went to see Joe Rogan, and now I go to Spotify. And this is why the whole market tanked this week. It's because the Fed says we would rather raise interest rates too much than risk inflation. Unless you would like your investments to age like this, you gotta answer this before buying Tesla stock. I'll see you there. My name is Matt Poches. Thank you for watching this video, and I'll see you right here. See you tomorrow. Or here.